Yo, what's up? Who's good? What's poppin'? What's happening? This is Usbatle from 777FX. My name is Usbatle. The company I work for is 777FX. So yeah, guys, today we're just gonna be going over. Um, we're actually gonna be creating one of our videos. Again, very bad intro, but I'm trying to read here. So what we're gonna be doing today, I'm still trying to find like um, a title for the video. But I'm just gonna put it this way. I'm gonna be teaching you guys how to approach, how to position yourself, and how to trade within the consolidation. So I'll teach you how to approach a consolidation, how to position yourself within a consolidation, and how to trade a consolidation. First of all, why is this so important? Because consolidations happen everywhere, and consolidations are actually a phase of market structure. Okay, we get expansions and contractions and expansions in the market. So you get an expansion, a contraction, and an expansion. Within this contraction, there is consolidation. So we get an impulsive move, up, move down, an impulsive move, and normally, okay, we got an impulsive move, a corrective move, and normally these corrective moves are consolidations. Okay, so let's just first go on the 4 hour. I go sorry on the hourly, just to mark out the most recent consolidation. So this right here was actually a very good consolidation to start off with. So we mark from the top to the bottom of the consolidation. So we understand that price is actually ranging between these two prices. So it's going up and down between these two prices. Okay. So that's basically what's happening within the consolidation. Right. So we also call a consolidation order flow stacking, guys. So let me just write it down for you guys here. So we also call it a consolidation order flow stacking. Righty, so why exactly do we call it order flow stacking? Let's just break it down. What exactly is order flow? Order flow is the orders that are going in and out of the market, right? So order flow is just the flow of orders. That's it. Plain down simple. It's in the description. It's in the wording. So orders, buy and sell orders, basically what make the market tick up and down is the buy and sell orders and the stacking of them. So the word stacking, what does it actually mean? I do not know what stacking means in totally, but what is happening at this point when they're stacking the orders? They are putting each and every like they're putting like what can I say? So when they're stacking the orders, that means they're actually putting more orders than usual. So they're stacking their buy orders or their sell orders in order for them to actually get a better position within that. So by order flow stacking, we mean they're just stacking their buy and sell orders, okay? Buy or sell orders, not buy and sell orders, okay? So by that, what do I mean? Like, so within the consolidation, as you can see, price is going down, price is going up, price is going down, price is going up, price is going up. You feel me? So, and then we have to remember that above here, sorry, that above here, this is the sell stop losses, and below here, these are the buy stop losses. So remember that everyone that is buying in Nasdaq, right? Their stop losses below this area right here. This is an area of liquidity. Hope you guys can hear me over the music. It's for ambience. So yeah. So this is where the liquidity is. By liquidity, it is orders again. Liquidity is just another word for orders. Okay. So let's take order flow stacking outside and position this. Okay, cool. So we understand that whenever people buy at this point, because price came down, created a bit of liquidity, created the low, meaning there's a lot of buy orders right here. Price comes down, obeys it again, creates buy orders again, meaning people are buying at this point, meaning a lot of people have what their buy orders here and their stop losses here. So there's a lot of sell orders at this point. Okay, there's a lot of sell orders because whenever they want to get out of a buy order, they have to sell their position. And when prices here, there was a high created, a high created, and a high created. So whenever price tapped here, there were sell orders, meaning there were buy orders here, stop losses. Because to get out of a sell position, you have to buy yourself out. You feel me? Or someone has to buy you out. So there are a lot of buy orders at this point. Okay. So what do you mean by buy or by order flow stacking? So within this area, what they're just doing is they stack their orders. Right, they stack their orders because within a short like amount of time, like in a short amount, because remember whenever the BFIs stack their orders by, okay, whenever the BFIs enter their orders, whenever they enter their orders, they enter with so much liquidity and so much fucking volume that when as soon as they've entered at this point, they've pushed price upwards, so they're no more gonna get the same exact entry. So now anything beyond this point is just speculation on how buying and selling works within the market. Speculation. Don't hold me accountable. Nothing up until I know fully that this happens. This is speculation from my 5 years worth of experience on how orders work in the market. So what we understand is for price to have been to have this bullish move upwards, there was a buy order here, a huge buy order here, or just huge buy orders here that push price upwards, right? And when these buy orders pushed price upwards, there were also sell orders at this point. There's sell orders at this point that also got triggered. And then these sell orders that got triggered, right? Whether it be retail traders or anybody else, okay? But these sell orders got triggered, and that means the stop losses are in this range. Even if you don't have a stop loss, if price goes against you and you're in the sell, the price goes against you and it goes above your account size, you're fucked. So you get out of a buy order, and the broker gets you out of a buy, get you out of that sell order by buying you out. Um, Without your permission, because your money is gone, like your leverage is gone, so you're a loss now. They get you out of the position whether you like it or not. So even if you didn't have a stop loss yet, you will get out at this point if your account is small. So as they push price upwards, they have a lot of buy orders at this point. As they push price upwards, remember they have sell orders right here at the top. The most sell orders they have is right here at the top. They have the strongest sell orders they have at the top. So now they're looking to push price downwards. Okay, they're looking for price to stay down. But now, what are they looking at doing? But what is actually stopping them? You know what's stopping them? What is stopping them is this bullish order block right here on the daily, which has a lot of order flow volume, which has a lot of buy order flow volume. You know why? Because if you go down and look at this daily order block, look at our price came back down, tapped it, and failed to break. So first tap, second tap. I know you guys can't see, but first tap, second tap, pushed price upwards, meaning there's a lot of bullish order flow volume within this zone right here. So this is the perfect time for them to actually give you guys a fake move upwards to get everyone buying so they can dump price down right after, trap you in your orders, then liquidate you as it goes down so they can actually be the only ones within this order. So they don't want any buyers, they don't want any sellers within this trend. Okay. So they literally want to be the only ones riding this position. Alright, so now we go into the fact that what usually happens within order flow stacking. So let me just go over what usually happens. So we get a consolidation, and within this consolidation, within I think I've explained this before. I have a video explaining this. Um, well, like I explained it in the video, but I'm making a video for it now. So there it goes, guys. So now it's buying and selling, buying and selling. Remember, there's there's buy orders at this point right here, which is the stop losses for the sellers, and the sell orders at this point right here, which is the stop loss for the buyers. Oh, sorry, other way around. People that are buying here, the stop losses are here. People that are selling here, their stop losses above here. So what happens now? So let's say price is coming from a bullish move already, right? Higher time frame bullish move. You feel me? So we know for a fact, first of all, with the buy order flow stacking, we know that the overall move is bullish. Okay, because this is just like there's the impulsive move and the corrective move, right? So we know it's okay, we are already we're bullish, right? And then the second thing we can notice is what we noticed, how exactly we usually notice if we are like Okay, let me just explain the process first. So whenever there's a consolidation type of thing, what happens is if we know that they want to take price upwards, right? I'll explain to you how we will know if they want to take price upwards or downwards. What they do usually, not even what they usually do, what they do is they take out these buy orders, right here. These early buyers took them out, boom, meaning now their buy orders are triggered, their stop losses are here, and they literally get liquidated at this point. Now they're the only ones within this position buying it, and there's more people selling it from the break, right? More liquidity. And as this happens, more buy orders accumulate from the retail traders, price comes back up, liquidating the early sellers, or the late sellers, or the breakout traders already liquidating them, or the panic sellers liquidating them, and then going upwards. And then remember, at this point when it comes up here, people are looking to sell here again. You feel me? What happens is it liquidates them as we liquid as the sellers get in here, they get stopped out. Boom, they get stopped out, and the early buyers are in, right? And they pick the right position because now price will skyrocket after. So this is what we call a stop hunt. It is hunting the stop losses, right? This is what we call manipulation, quote unquote, because there is no manipulation. It's just how price works, and it's just a system. Remember, price is like remember the charts is like algorithm. It's how the algorithm was actually created in order for it to get the most amount of liquidity at any point and then move. You feel me? So yeah, that's basically it. I hope you guys can understand what order flow stacking is. This is it, a consolidation, stop hunt, order flow stacking, whatever you want to call it. It's the same shit. Right. So now I've taught you what did I want to teach you? It's how to approach a consolidation. So how do we approach a consolidation first? So first we mark out the consolidation, and then we look at what move is it, like what move does it come from? A bearish move? Cool. Comes from a bearish move, meaning we position ourselves bearish. So we approached it, right? We approached it in a in a way that we look at the higher time frame bias, like yes, it's in a consolidation, it's ranging, it's not going up or down, but where is it coming from? It's coming from a bearish move. Okay, cool, right? And then we look at, sometimes to position ourselves, we look at these moves. So we look at the sell move, and then look at the buy move. Look at it engulfed it fully, and then the sell move, then the buy move engulfed it fully. You feel me? So let's say if there was like a sell move, a slow sell move, then a fast up move, slow sell move, then a fast up move, slow sell move, then a fast up move, engulfing. That means now there's a lot of buy orders at that point. You know for a fact that even though price is selling, the main orders are the buyers. So you look at that pattern and you see, okay, cool, maybe this is bullish order flow stacking. You feel me? But this was bearish order flow stacking because we see on the 4 hour it's bearish. And then what we will look for, what we usually will look for is a supply demand zone at the top of the what's that, 4 hour, not even 4 hours sometimes, but a 4 hour zone, supply zone. Now we know it's okay. This is order flow stacking at a bearish. Like we understand it. It's order flow stacking. It's consolidating, but what is it? What the type of orders that are being stacked are the bearish orders. Okay, we understand the main point of this is to get price lower than what price was before. So we understand. Okay, we mark our supply zones. So now we understand. Okay, cool, this is how we've approached this consolidation. We know it's bearish order flow stacking. We know okay, if there is a stop hunt, which there will be a stop hunt. If there is a stop, when there's a stop hunt, we know the sales are actually the most profitable orders to get in. So we look for a 4 hour sell zone. Price comes up, gives you a reaction. You sell off the 4 hour zone. You you normal rules. We enter for 50-minute engulfing entry. So we could have entered after this entry right here. Cool. So yeah, we sell off of a 4 hour zone or whatever. So price comes up, breaks us out of this consolidation. Remember, guys. So price comes up, breaks the consolidation, stop hunt, right? Liquidates everybody. Price goes up a little bit, gets the 4 hour supply zone they wants to sell at. Now remember one thing: the early buyers are gone. All right, these buyers, the early sellers are gone. You feel me? And now at this point, there's actually breakout traders, break and retest traders, and so there's breakout traders, break and retest traders, and the panic buyers. They're in this position. Price comes up, hits the supply zone, falls to hell right after that, liquidating the early buyers. And now they're the only ones within this position because there's no sellers, there's no buyers. They're the only one. They've saturated this specific position on this instrument, and now they're the only ones with the most amount of volume, and they can finally take price downwards. Boom, that's simple, guys. That's basically it. Just to recap, you find what type of order flow stacking it is, whether bearish order flow stacking, bullish order flow stacking within the consolidation. Because if you know this bullish order flow stacking, you know the stop hunts will be to the downside. If there's bearish order flow stacking, the stop hunts will be to the upside. So then you know where the stop hunts will be going. You wait for the stop hunts, and then after the stop hunts, you look for a supply zone that which price might reverse off of, and you take the position, and you hope for the best. You admire your risk. You adhere to your risk parameters, and that's that, guys. I had actually analyzed Nasdaq on one of my ideas on TradingView. I'll check it out just in a minute. No, 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 no. Um, I think this is the one that actually yeah. Is it? It's not this one. Um, no, this is my strategy. This is my strategy. Okay. Oh, there's it. There's it. I think my ideas are here. Okay, guys, I'm trying to find my ideas. Oh, there. So there's it. This was Nasdaq before. Don't mind my username, but this was Nasdaq. As you can see, where price was. Price was within the consolidation. I understood that. I understood that. Okay, price, since it's coming from a bearish move on the higher time frames, we understand that it's actually bearish order flow stacking. So we look for a bullish stop hunt, and then we look for our supply zone, which is this is the first zone. Then we look for price to react over that zone and take the sells. We look at what happened. Price didn't actually sell off of this fall zone. It sold off the fall zone at the top, which is this one right here. Right? And this is what I said. Nasdaq is currently ranging, order stacking, looking for possible stop hunts outside the range to liquidate early sellers and break up buyers. So literally, guys, this is a strategy that works, and I've learned how to trade consolidations using this strategy. And you guys can test this out, back test this. This is just one thing from me I've learned from trading in markets, and it's also a concept I learned from BFI, the BFI trading school. So yeah, guys, that's all to it. I'm not even really gonna like recap it. I've recapped it. That's it for me today. This is 777 FX. Spatlenzama, young millionaire, young billionaire. Y'all know what it is. Six-figure nigga, six-figure trader, 5 figures monthly every fucking month. Y'all know what it is. Those are the goals I'm affirming, so don't mind me. Peace out and have a great day.